It
Okay.
has to be on this
Awesome.
book.
Awesome.
Okay.
Okay, my techie Yvette here to my side. Thank you.
Awesome. The
Appreciate it.
floor is yours. The floor is yours.
All righty, perfect. So let's go here to the so by the end of this short class, we should be able to explain credit, reporting of credit, impact of the operation and the growth of small businesses, identify credit reports and other reporting systems commonly used to access risk and extending credit to small businesses. So what we use to determine credit, what do small businesses use to determine credit? It's a little bit different than your traditional personal credit. So we're going to talk about what those differences are and what you can do to enhance that as well. Identify the benefits of small business that derives of positive record and managing your debt and obligations. That's the most critical part of businesses, is being able to manage debts for the business, the obligations to the business, revenue, and track all of that, because those are the things that banks are going to ask you when you're needing to request a loan, etc. We're going to have, those are the critical areas that we look at for extending credit. So really important that you understand those. Identifying strategies to build and improve your credit, to improve the business credit. Okay, so to grow your business credit. Okay, credit reporting, and I'll give you the floor right here.
Okay. Okay, so credit reporting. To provide information by banks, lenders, investors, landlords, businesses, and government agencies. Creditworthiness, insurance, underwriting, employment, certain licenses, continued credit terms, and business needs. And then credit reporting impact, borrowing, seeking credit, report users, reporting of information.
Okay, and borrower seeking credit. So there's a lot of people with businesses that are starting off, and possibly you don't have enough funds to start your business. And there's a lot of avenues there for that. Not only for us as banking institutions. So I'll give you a couple of tips. If you're starting off, if it's a startup business, for example, it's not what we consider bankable business. So therefore, a bank may not be, most likely cannot extend credit. So, but there's other ways and other avenues that you can get get a loan, a small loan, like what we call micro loans, through other agencies, okay, that are out there, avenues are out there that help, and they're usually through nonprofits that can help to extend a little bit of credit, a small loan from 500 to usually to 25,000 to get you started on the business until you build. And some of you may be asking, well, what is bankable? What makes you bankable, Eli? Well, 2 years in business is considered bankable. So 2 years of credit history is included bankable. That's why this class is so important. The bankable part it's a credit history piece, not only being in business for 2 years, but establishing credit. There's a track line of business credit in there to show, so we can look and say, hey, do you pay your obligations on time? Or are you credit worthy, etc. Those are really important. We're going to talk a little bit about how we establish that.
And it's really important to make sure that you separate your business credit by your personal credit. Pay your business credit separately, pay your personal credit separately. So you can establish business credit.
Very good point. And we see that in the bank a lot. A lot of folks that are starting off on a business, their own home business. Let's say you're an amazing a baker, and you started a cupcake business at home. That's wonderful. That's awesome. But we noticed that a lot of folks that are starting off on their businesses, they open a personal account. So they're using their personal account to bank their business. And that's a big no-no in the banking world. You're supposed to separate it. Why? For a lot of reasons. Regulatory wise, so in other words, the government, the IRS, wants always for you to separate your business so that way they can track what is part of your business earnings and expenses versus your personal, something completely separate. So it's always important to have a separate account. That's a very important thing. If a bank later on throughout the process of you having an account with them for a year and you've been using your business mixed with your personal, it could come up that they'll ask you to either separate the two accounts, or they may even ask you to close your relationship completely out because you're intermingling the business money with your personal money, and it's very difficult to be able to establish when you have to do reporting for the IRS that in fact this is your money for your business and this is the money for your personal. So it's really important that you don't be afraid to open a business account with your local institution, your local bank, because there's ways that you can do that without getting business licenses, et cetera. If you do that on your sole proprietors, et cetera, when you're starting off, there's different ways that would be another course, but we can move on here. Okay, so business credit reports. Let's talk about that. Participation might increase marketability. So there's ways in the business credit you can participate, and we would encourage you to actually participate in one of the business credit companies. So actually you establish it, you log onto it, and you pick a package. They sell you packages that you can do to establish the credit, to put the credit in there. So actually you can build into those packages. Okay, so established accounts are monitored and controlled. So if you use one of the credit agencies to establish your credit, you can build your credit report on your business based on the package that you purchase with them. Okay, let's talk a little bit more about that in just a second. Data may be used to obtain business credit, of course, because the more information you have on there, the more the banks are going to see to establish a credit relationship with you. So one of the important things, obtain a tax ID number from the IRS. So you're going to have a tax ID number for the IRS. If you're a sole proprietor and you're doing this on your own with your own social security number, then that's separate. Okay, that would be for your startup business. It's your social security number. Everything's going to run on your social. Always the recommendation is, or a rule of thumb is, if your business is going to be expanding at a rapid pace, that you want to separate that and have a tax ID number. Again, that's between you and your tax reporting professional. But if you separate that and you get your own tax ID number for your business, separate from your social security number for your personal, then that would be a recommendation to start establishing, so that business can establish its own credit. Okay, and then you would get a DUNS number. Okay, that is a data universal numbering system. Okay, it's done through Dun & Bradstreet. Okay, and through them you can get that identifier number. They would indicate there the type of business that you have and start a reporting process with them as well, which is really important. And actually, the banks all use Dun & Bradstreet. So the information that's on Dun & Bradstreet should match the information that is in your relationship with whoever you bank. Okay, so the type of business that it is, because I can tell you in our system, in our bank, we have a system that we can pull up the information from Dun & Bradstreet. And I've seen new clients that have come on board to us that have asked for a business credit or a line of credit. And when we pull up their Dun & Bradstreet, it says that we just had one. It said, this is a design studio for furniture, and it's said on their Dun & Bradstreet that it's a bar and they sell liquor. And in fact, they're not a bar, they're a design studio for furniture. So it's really important that you check your Dun & Bradstreet and that it matches what your business truly is. Otherwise, in this particular case, we can't extend a loan to a bar. So we weren't able to help them. We were able to have that correction done for them. So it's really important that you sign on both and you get that number. Okay, you can subscribe to a reporting service that meets your needs, because there's different reporting agencies. You can do it through Dun & Bradstreet, which we recommend that you do at all time anyways, or one of the credit agencies. Provide your business registration information, financial statements. The more information you give them your financials, give them your business plan. The more information you give them, the more they'll load onto their system. So the more that the institutions that are going to provide credit to you can see, wow, these folks are up to date. They have all their information on there. They are set. They're prepared. They have a plan. And that's going to be great and easier to establish credit. Okay.
Okay. So business credit reporting. A business credit reporting includes commercial credit scores, indicator to predict the potential for business failure, credit fixing and experience for secured properties, business ownership information, other business owned by the same organization, public record of security interest filing.
Okay, and that's important too, because whatever's being shown in there, it's always important to check your credit, to run it at least once a year for your business as well as your personal, so you can check what's on there, what's being reported under your tax ID number, your EIN number for your business, and to make sure that everything jives with your business and everything that you have actually put in there. Okay, so that's really important, and that would also help avoid fraud, etc. Important. Okay, 3 business reporting agencies. These are the big ones. Is the Dun & Bradstreet, Decide with Confidence, DNB, Experian and Equifax. Okay, now we're talking about Experian Business and Equifax Business, not the Experian and Equifax that you get on your personal, but this is the business side of them. They will all do the same. So it's whichever one has a better fit for you. It's not one over the other. It's whichever one you think is best for you. I always encourage you to, reach out to all three, see which one's the best fit for your business, and go with the one that's best for your business. And if some people like to do more than one, it's up to you. Okay, so the consumer reporting agencies, what do? Well, any person, business, and assembles, evaluates your credit information, just like it does on your personal side. It reports consumer credit management risk. Okay, risk is really important because, and with risk, the more risk you have, you hear a lot of risk in banking, and it's, how risky is this business? How risky is this client? Now, risk can come in a lot of different ways. It could come with financial, it could come with debt. If you have a business that has a lot of debt and you don't have a lot of revenue, that's risky. So you can weigh the risk in a lot of different ways. But I will tell you, the best way to help you with risk is always have a business plan. I have seen it time and time again where new startup businesses do not have a plan. And if you don't have an established business plan that's going to take you through the long run, then those are the businesses that usually won't last past year one, especially past year two. So really important that you have a business plan to get you through the most difficult part of starting a new business, which is the first 2 years. Once you get past that, you're most likely going to be sailing okay. But you want a business plan to get you past that hump. Okay. So reporting consumer credit managers, notice of debt incurred. Okay, notice of property used for collateral. So if you have a UCC filing, any properties, if there's a property attached to it, that will be filed in UCC filing. And that's important to have to be established. Increased timely payments, really important to always check and monitor your payments, whoever you're doing it, account payables, accounts receivables, all of that. But payments are really, really important. Greater debt recovery potential, uncover fraud, which is important to be monitoring, and locate the debtors, okay? Because you want to be always in touch with your, to be on top of your debts.
Credit reporting to credit agencies. Retail locations must have locations with secured locks, separate offices with secured filing, protection of data, secured computers. That's really important. You don't want your information out there, not secured. Also, requirement to report directly. Secured location with secured practices, minimum number of accounts reported monthly, software purchases for reporting and handling disputes, accurate record keeping and reporting, separate setup fees to pull credit, and training.
Great, very important. Okay, additional services of agencies. Okay, so there's different agencies. Employment, that's pre-screening and employee package services. You can have that if you're growing and you have a list, have more employees. Those are important things. Pre-screening is really important to make sure that those folks are there for the right purpose, to help you and help you grow your business. It's really important to spend sometimes a little bit of money to have pre-screening done. And there's packages that you can do for this. Change of address, contact information, and bankrupt debtors. All of this can be monitored, and this information on the packages that you purchase through your credit agencies, they can help you with all of this. So you can be able to pre-screen also the clients, etc. Collection services, take legal action to recover debts, to buy debts. So that's really important too, because hopefully you never run into this, but in the future, as your business grows, if you run into some collection issues, then you have a team to help you with that as well. And those are all packages that you can purchase that house all of this. Marketing, mailing lists, like customers, are really important. Again, marketing is also something that's it's not talked about enough, but how important it is for small businesses. If you're starting a business, always have a budget for that. Again, the plan, have a marketing plan and a marketing budget is really important. So you want credit, you want to establish credit and join one of the credit agencies and provide as much information to those credit agencies. Have a marketing plan and a budget for your marketing to get your information out there. If it's going to be social media, if it's going to be pamphlets, if it's going to be an events, seminars, whatever. But you want to have a plan and a budget for that as well. Very important. And then here we have also lower risks, fraudulent accounts. So those are the important things that we have to monitor. Lower compliance risk, agency models, the training with Fair Credit Reporting Act and Fair Credit Billing Act, really important as well.
Here we have Fair Credit Billing Act, billing practices and errors, payment, credit account promptly, returns, offsets. Let me see. I think I skipped the page. I'm sorry. Business purpose for use of reporting, consumer authorization for use, fraud alerts, disputes, identity theft, access to free reporting, policy and procedures, limitation to use reports, use of credit score, complaints received by the Federal Trading Commission, civil liability for negligence, responsibility for those furnishing information.
Yeah, Fair Credit Billing. Okay. All right. So that takes us to personal credit impact on business. Okay. So personal credit, how that impacts business. Well, it does. Well, why would it do that? And I've had customers ask me that question too. Well, my business is perfect. The business of my business is great. It runs great. The accounts are great. The revenue is strong. Everything is wonderful. But guess what? When you're asking for credit, and so 9 times out of 10, the bank is going to ask you for a personal guarantee. So what does that mean? Well, we have to run your personal credit too. So your personal credit is not up to par with that wonderful business that you have running. That's going to affect you. Okay. So 9 times out of 10, that's really important. That's going to affect you. So again, it depends on a lot of factors like the size of your business and who's involved with the business and what your history is, et cetera. But most of the time, you're going to have a personal guarantee. So it's very important that you have your personal credit up there in tip-top shape, as well as your business, not just one or the other. So it's important that the two coincide. So when you need credit because you had a great deal, a great purchase, or you're expanding your business because it's doing so well, that you have your personal credit up there as well. Usually 680 FICOs is kind of the line of requests for personal guarantees, 680 FICO and above. And then that way you have, you're prepared. So when there's a big sale or expansion of your business, you're ready to go with your personal guarantee. Okay, very important. So build business credit with personal liability. There it is, the personal guarantee. Establish credit with vendors and suppliers because they're going to request that. Sometimes they're going to say, you know what, I want you to guarantee this. So we're going to use your credit as well. Build credit with local bank and business names. Okay, so again, the personal guarantee. Maintain established vendor and supplier relationships. Very important. That's really important. Not only on the credit side, but to have a great relationship with your suppliers is crucial. Be in great communication. And I couldn't stress it enough for you to always communicate with your suppliers, your vendors, have a great communication with them because it's going to help bridge a lot of the gaps in business and help them extend themselves. Sometimes when you quite can't make it for whatever relationship they have, and they're like, you're not quite there yet, it'll help bridge a lot of those gaps. So I really recommend the communication back and forth with your vendors and suppliers is crucial to build that. Okay. Dispute errors quickly. So provide documentation to support claims, send directly to the creditor. It's really important to you. That stuff, the negative stuff, you want it out of the way. So get those out of the way right away. So dispute those quickly, provide documentation to nip it in the bud, send it directly to creditors, request all reports to end it up, just get that out because that's just going to get in the way of your business. And you don't want to have to deal with any of that. It's just time consuming and it's going to stop you and slow you down from your business.
And always remember that anybody you do business with, if they're a partner, if they own more than 20%, their credit counts also. So they may be only 20% and you're 80%, but if they have bad credit, that will affect you from borrowing also because they have to get personal guarantee also. So make sure.
Good point. Absolutely.
Thank you.
And here also to improve your personal credit score, pay your loans and other bills on time. Again, it's important that they go hand in hand. Avoid judgments and tax liens because that'll always hold you back. Comparison shop for financial services. So again, even with those 3 credit agencies, seek the 3 of them out. Have them sell to you. What do you have? Well, why should I go with you? Let them tell you what they're going to do for you. Okay, that's really important. And for your own, even for your business, comparison shop with vendors, etc., and providers as well. Keep older accounts and pay them off monthly. Why would I want to do that, Eli? I want a new account with this new. Well, because the older accounts is your history. So credit is also based on the history of your accounts. How long have you had your credit established? So the old accounts will actually hold you up. So keep those. Don't close those unless you really have to, and keep those, paid on time, etc. And those will actually help you boost your credit. And that works on both sides, on your personal and your business side. This is really important.
Personal guaranteed advantages and disadvantages. Advantages indicate your support to the business lender, may help you establish credit, may erase startups or cash flow, better loan terms. Disadvantages may be required to make payments if business defaults, may risk losing personal assets, including your home. Spouse may be required to sign if you're married. Other implications with partnerships and owners. That's the disadvantage of that.
Right. So, okay. So it's important to think, if you think about it, okay, you need a personal guarantee, right? So if you have a partner, you're all involved. There's two of you in this business. We're going to have to both sign. So it's important that we keep each other real on this, right? That we keep our credits going, that we pay our bills, that we manage everything, because we can be hitting that disadvantage side of it, right? If one of the partners is saying, I don't really care, and does their own thing, and it's just letting the business go down, then the person that's struggling to keep the business afloat may have to suffer the consequences of the disadvantage, right? That they're going to have to be paying off the debt on their own to keep this afloat and for their credit not to be damaged, may lose assets because of this as well. And of course, if you're married and stuff like Yvette said, your spouse may have to sign as well because it may be required. So important that you work together, and that's why get a partner that really enjoys the business that you're doing. If you're going to use a business partner, that you both enjoy what you're doing and you both give it your all. And then finalizing here, the new small business owner, your personal credit is the foundation for building business credit. So you start with your personal. It is you. It's all about you. It's your dream. It's your goal. It's your business. First, build on yourself, your personal credit. Make yourself credit worthy. Then build your business up there. And just like Benjamin Franklin says, remember that credit is money. It's not just credit, it's money. It's going to have to be paid. So it's really important. Credit is money. And that, my friends, concludes this. So let's remember here a little summary. Okay. Establish a credit history for your small business. Okay. You click. Okay. Establish credit history for your small business. So you want to always have a credit history. And you guys remember how long the credit history to make it bankable, right? That I mentioned to you. I'll ask that when we open up for questions. How many of you will remember how long do you have to have a credit history for to make you a bank? Well, it's considered bankable business for credit. Okay. And know what is on your personal credit reports. So run your credit reports once a year, and you can get that for free without impacting your score once a year. And review it and make sure you know what's on there. And if there's something that shouldn't be on there, make sure you get it fixed right away. Beware of and follow all laws, industry standards, okay, for credit reporting. Avoid fines, legal judgments. It's important. It's the boring part of it that you have to remember. What is the legalities of this business or running a business, etc. But those things are the ones that are going to save you. They're going to help keep you. That's the foundation. So it's important you take the time to read and understand, and know when it's tax time to do your reporting and your taxes, etc. Or if you have, if you have a judgment for whatever reason from a client or something like that, that you get that resolved. All that, keep on track of all that stuff. It's really important, and that will help your business grow and have a very successful future as well. Now we will open up for questions.
Awesome. Thank you. Can you guys see and hear me?
Yes.
Awesome. So I'm gonna go ahead and share some questions that we have here from some business owners. Let me pull them up right here, and it's right here. Okay. Let's see. Okay, so one of the questions someone asked is microloans were mentioned. do I need to be a U.S. citizen to get access to microloans so I can build my credit?
That's a great question. No, and it depends again on, I'll give you an example.
Mm-hmm.
There's a nonprofit called Acción USA. I was actually on the board of that nonprofit, and that is a micro lender, and they started in Brazil. It's an international micro lender. They're in the United States. Acción USA is in the USA, and it's up, but it's all over the world. And no, you do not need to be a U.S. citizen to get a micro loan. It's just going to depend on what the rules are for the particular micro lender, for that particular micro lender, which, by the way, most banking institutions participate with that micro lender. So if you're with a Bank of America, with a Chase, with a Citibank or Wells, most likely they're participating with Acción USA to help fund those micro loans from $500 to $25,000. And then not only do they give you, they're not only there to give you lending opportunity, but they have workshop, financial literacy to help you establish, to build a business plan and that type of stuff. And a lot of other ones, not just Acción.
Mm-hmm.
But yes, to answer your question, it's not a requirement for most places.
That's good. That's good to know, because I know we serve a huge community of entrepreneurs, and some of them don't have U.S. citizenship, and this would be a great resource for them. That way they could build credit. So that's awesome. Let's see. Another question is, what do I do if my business credit and personal credit isn't separated? I have a business, but it says, where do I go from here? So I guess I want to know, like, what steps should they take? What would be, I guess, the first step towards fixing that situation?
I think definitely is getting a tax ID number to separate it, and
Okay.
then actually opening a business account in a business name. That would
Oh,
help it, so you can
okay.
separate both.
Mm-hmm. And I would say if you say, you know what, right now I can't get a tax ID number, I'm using my socials for right now, then that's okay for right now. It's best to do it like Yvette said, but you can still separate it. So you can still go to your bank and ask for, to open a business account, a sole proprietor business account under your tax number with your business name, but separate from your personal. It's crucial that you don't run your business on your personal account. You must separate those. It's very important. Good
Perfect.
question.
Perfect. And just to follow up with that question, I see someone said, what documentation do I need to open up a business checking account? So I guess what paperwork should I expect to bring in order to open it?
And again, good question. That's going to depend on the business. Now, so an individual business owner, which in the sole proprietor bucket, so to speak, if your business is Eli Rodriguez Landscaping or Landscaper,
Mm-hmm.
then I am the business. So you don't have to have anything. None of that. You just have to have your tax ID number, the name of your business. Okay. If your social security, of course, as you're running it on yourself. If your business is EJR Landscaping, then it's a sole proprietor separate from your name. So then you're gonna need to have a DBA, DBA, doing business as. You're gonna have to file that, and then and have your DBA to open your business account. So it depends on how you word it, okay, on the business, which depending on the business you're gonna have. That's for the sole proprietor portion.
Mm-hmm.
Of course, there's different types of business corporations, LLCs, et cetera, that gets a little more complicated. Those you'll have to file separately, differently.
And a lot of that information is on Zoom. You can go to LegalZoom,
Mm-hmm.
and they'll show you how to do sole props, LLCs, all that information. Of
Okay.
course, for a fee, but they do explain it. And for a sole proprietor, you could just go to the county recorder and file a DBA,
Uh-huh.
fictitious business license. Okay, or the county you're in.
Mm-hmm.
Okay.
Okay. Awesome. Let's see. I have another question here. Someone asked specific for their business. They said to get a business credit card for cleaning services. They provide cleaning services for businesses. What would I need to do?
Do they have a business account already established in a different name, or are they using their own name?
I'm assuming they don't have anything yet for the business. So I think what they're asking is, like, is it possible to get it for the cleaning services? Or what to get? Let me see. To get a business credit card for cleaning services, what do I need? I'm assuming the stuff you guys already shared, but I guess the best way to answer that is visit the bank itself, right?
Yeah, that's your best bet. Banks we're all here to help you. to help the consumers, to help you. If you have an established business and you want a business credit card, usually business credit cards are the easier way to go. It's like the first step before establishing a separate type of business loan, an extended business loan. But definitely visit your bank and have the conversation with them. They're going to want to check. I mean, it's going to be credit based as well. So they'll run credit if it's a sole proprietor, if it's a corporation, or et cetera. They're going to, depending on that, it will be the product.
Okay, awesome, awesome. And I think someone said, I think what she's asking is if there's separate documentation required for each business. I'm pretty sure that the answer is yes, right? Every
Yes.
business is different.
Mm-hmm.
Okay, perfect. Now, another question I see here, someone's asking is, how early into the business do we need to get a business ID and business bank account? Is it after a year, after 6 months, the first day?
I would say the first day. Start off right at the beginning.
Mm-hmm.
It makes it so much easier just not to commingle your funds with your personal funds, separated, and it'll be so much easier
Yes, that's
right
crucial.
from the get-go.
From the beginning. From the beginning.
Yeah.
Awesome, awesome. And then that same person about the cleaning services said, I have a business account, Wells Fargo, using my social only. So
Okay, so they can get a business.
Yeah. If it's a business account, then you go to Wells saying that you want to establish business credit. And then they'll walk you through their process of what they have available in their products for a sole proprietor. Absolutely.
awesome, awesome. Thank you, thank you. Next question is, will my business credit affect my personal credit? Or how can it affect it?
Okay, so sole proprietor is on your Social Security. So that's you. That's going to affect you either way. So and you get into more complicated things when you're talking about corporations. And if you have a corporation, that separates your personal from your business. The corporation, what it does, can protect you from your personal side. So it gets a little deeper. But yes, there's ways to do it to separate it. However, as a sole proprietor, when you're using your social, it is going to affect your credit because it's your Social Security number that's being run.
Okay. Sounds good.
But it depends, to
And
answer the question.
yeah, of course. Yeah, definitely. You guys are answering all the questions. Thank you. I saw someone say right here, I heard just because you get approved for a business credit or a business loan, is it guaranteed to be reported to the Business Credit Bureau or not? Is it always reported?
It's obligation of the institution that's lending you the money to report it. Absolutely.
Okay.
So they
Okay.
should be reporting it.
Okay. Perfect. And someone here said, what if there are two business owners? Do we both need to have separate business ID numbers? And also, would both of our credit scores be affected if the business credit isn't doing well? I know it's kind of specific, but let's see if you guys.
Okay. So,
It's the whole thing with the 80-20%. If you're 20%, then yeah, you have to be on that credit, right? So let's say I own a business, but you own 19% and Eli owns 81%. So then my credit isn't affected because I'm not a majority of the 20%.
Okay.
I have to be 20%. But let's say if we're partners and we're 50-50, yes, it's going to affect both of us. If let's say I'm paying the bill and we're both on the account, on the credit, it's going to affect both of us.
and on the downside of the business, if the business gets sued or there's some sort of problem, you're both going to be affected on something like that because you are an owner of the business.
And it's
So it's
the
gonna follow
signature
you.
guaranteed.
Okay.
That what we're talking about, the signature part.
And advice on something like that is that the whole thing for us as institutions is to help advise. We're advisors, so we say the protection usually lies which the level of business. So if you make it into a corporation or an LLC, which is the easiest way to do it, that's where the protections come. So it's a little bit more detailed, but your institution can tell you about that, which that will protect you personally and separate the business from the personal. Because that was a good question. I know a lot of people are concerned about that.
Okay, perfect. Thank you. And someone here asks, if I obtain a loan for my business, how soon will it be reflected on my business credit report?
30 days, right? After the 30 days.
Yeah, rule of thumb is 30 days. Rule of thumb.
Okay, so if they don't see it right away, just give it 30 days.
Yeah.
Okay, sounds good.
Usually credit is updated or affects every 30 days. So let's say you pay late 1 month, the next month it's going to show, that type of thing. So it's about 30 days.
So similar to like regular, personal
Yeah.
credit, right? Okay. And someone asked, if you have an LLC, then you are protected. I guess what they're trying to figure out understand the protection behind the LLC.
Right. So people usually file LLCs for the protection to separate themselves. If the business, for example, lawsuits, except the business is sued, and the person isn't sued. So so it separates your personal assets from your business assets, and that's one of the protections. I couldn't answer specifically because it's going to be case by case on certain particular layers of business, but for the most part, those are the protections: an LLC, a corporation, an S corp, etc., to protect from the personal assets.
Yeah, great questions are being asked. I think the more
Mm.
specific questions, definitely it's always best to go in person at the bank. And like you said, you guys are advisors, you help out, and they'll help you guys out with your questions for sure. Another person asked is business credit necessary for a cash only business? If I only accept cash, no, nothing else.
And business credit is always necessary because right now your business is cash intensive. It's cash, but what if you expand? What if you go into something different in the business, or you expand the business where you're needing to go into that you're going to need to have credit? It's always best to build your credit because you never know. And if you believe in yourself that you're great at what you do, then you expect to expand, and therefore you should be prepared for credit.
Mm-hmm. Okay, perfect. And someone asked, other than banking services, what other services do banks or does, like for example, Bank of California, offer to small business owners?
You want to answer that?
We offer everything. We do consumer, anything kind of consumer accounts. We do loans. So we're here to help you save and for your future, to build your future. So from
Multifamily, you're
yes,
buying a building. We're a business bank, so we're mostly going to be on the business side of it. So any type of small business loans, from credit cards to small loans to large loans to commercial loans. You're buying a strip mall, we're there. You're a construction loan, you're building something, we're there. We can help finance that. And multifamily, you're 5 units or more. We do those loans too because that's considered commercial as well. Even though it's a residential building, we do those loans as well. On the personal side, we do all of the banking, the normal banking as well, checking, savings, all of that. Develop your, banking for your children and all of that as well. Credit
Mm-hmm.
cards and whatnot. We don't do, in our particular bank, because we're a business bank, we don't do home mortgages to purchase a mortgage or something like that, a house. We don't do those anymore. We used to, but we don't do that because we're focused more on the business side. But anything on the business side, we do what the larger institutions with. And most of the banks that you all bank with as well are very similar on the business side.
Okay. What I heard, I guess what I can reply to that is it's good to ask around and check various banks because maybe one bank doesn't offer it, but the other one will. Like you said, yours doesn't offer mortgages, but this one does offer mortgages. But then they don't offer business products, but then you guys offer business products. So it's good to see what other banks offer and what. And a good question I see right here, which actually I've seen multiple times. A lot of our small business owners that we work with is, and just the community in general. Someone said here, I was turned down for business credit, and because my personal credit was not doing good, so I was offered by a company to fix my credit. How credible are those types of companies?
There are very good, credible nonprofits
Mm-hmm.
that can help you. But I also want to say, and I come from the nonprofit side of banking prior to this role, um, be very cautious. Make sure that it's a legitimate company that wants to help you build your credit, that it's not, there's a lot of companies out there that say that they're consolidated debt companies that want to bring all your debt consolidated. They take fees for this. And it turns out to be a long, drawn out mess with your credit. There you can go through government agencies that can connect you with the good, legitimate credit agencies that can help you establish yourself and credit. There's financial literacy that they provide. They provide assistance, help, guidance, and all of that. I would go through that route before you just go venturing out on Google.
Mm-hmm. Okay, thank you, good answers. Great answers. And I think this is gonna be the last question. It's a good one too. Is how often should I check in with my banker on my business, on the status of my business, and should I be checking in once a year, every month, or what do you guys recommend?
I definitely say at least 6 months. Every 6 months, things change. You know, today, look at the pandemic, how it changed the world.
Mm-hmm.
From one day to the next, your business shut down. So I say, have a great relationship with them. Every few months, but no more than 6 months for sure.
And
Okay.
I would turn that around. Your banker should be calling you. So I expect my associates to be, helping me reaching out to our clients. So we like to check on our clients. I go visit my clients. I was in San Diego visiting clients yesterday, and I'm in Orange County. It's important that we as a bank are out calling you to make sure that you're doing okay, that your family's okay, that if you need anything from us, or let's do a financial checkup. It's been a while, we haven't talked. So it's important. It goes both ways. If you're not getting that from your bank, then I would reconsider that of who you're banking with, because they really should be reaching out to you.
Because at the end of the day, you are the customer, right? So
Yeah.
yeah. So sometimes I think small business owners forget that. And even though I said that was the last question, there's one last one. I think
Sure, no
it's a good
problem.
one.
Okay.
I have an LLC and my personal credit is excellent. How do I get approved for a business credit card? Do they use my personal credit? And the question is showing up on the screen too if you want to say it again.
Okay. Yeah. So if you have an EIN on your credit, and again, it's going to depend. I can't answer for all the businesses, but if you're running it on all the banks, but if you're going to run it on your business EIN, sometimes they will require your personal as well. Okay. So they'll ask for your personal, your tax ID number or your social security number to run your credit as well in certain cases. So it's going to depend again on your institution. I refer you back to your bank to make sure and to ask them, how are they running? Are they running your EIN or your personal credit or both for that? But I mean, it's great. Congratulations to you with your LLC, and that you have great credit, because for that you have a personal guarantee. Now, I would also advise you to go further than that, than a credit card, because sometimes, like for us in our institution, we have a line of credit that's not a credit card. We have credit cards for businesses, but we also have a line of credit that that could be much more competitive and give you a lot more availability on a line or a loan than our credit cards. And that may be available at your institution. So I would advise you to ask first what other options there are similar to that can probably save you money as well.
Awesome. Thank you. Thank you so much. I think that those were all great responses and great questions as well. And great presentation. I just want to thank you, both of you, Eli and Yvette, for the presentation today on how to build business credit. And I know you guys answered even more than that. You're talking about LLCs and talking about personal credit and so much more. I mean, you guys are the experts, so you guys did really good. Thank you for that. We hope to have you guys back soon. Maybe discussing on another topic, but I just want to say thank you. I don't know, Eli or Yvette, if you guys have any final remarks, something final you want to share with our business owners.
I just want to say, go for it. I mean, don't be afraid to take that idea that you have or that desire that you have to be self-employed and going to the next level. There's all resources. Start with your bank. If your bank doesn't have the resources, then reach out to profits that are out there to help you. But don't be nervous. Get out there, ask the questions, and relive those dreams of being self-employed.
Absolutely.
Thank you. I think that was very inspirational, and like Eli said, just don't give up. Reach out. Don't be alone. You're not alone. You got a lot of people out there that are supporting small businesses. They want to help you. So without further ado, thank you to everyone who was part of this presentation, as well as the audience. Please share this with your friends and family. That way they can also be empowered through this information, this great knowledge, because knowledge is power. So thank you again to Eli and Yvette and everyone watching, and we will see you on the next workshop. Take care, everyone.
Thank you.
Bye.
Bye.